The price of triumph. Nothing in life arrives free. Every treasure, especially wealth, demands a toll. The key lies in uncovering that cost and summoning the resolve to pay it. The catch? That price often hides until the journey's deep, revealing itself as a bill long overdue. Consider Titan Industries, a titan of 2005 with a $400 billion crown, a symbol of corporate might. By 2009, an economic storm shredded its lending arm, once half its profit engine, sold off for scraps. Risky bets on renewable tech and gas fizzled, incinerating billions. From a $50 peak in 2006, its stock sank to $6 by 2019. CEO Samantha Klein, at the helm since 2002, bore the blame. Her bold vision, buyouts, cuts, and the plunge drawing fire. Leaders lauded in boom times shoulder the bust. She stepped down in 2018, leaving a parting truth. Every role seems simple from the sidelines. The battlefield's thorns stay veiled from the stands. Steering a sprawling empire, balancing traders, regulators, unions, and red tape, isn't just hard. Its depths elude grasp until submerged. Klein's successor lasted 16 months, a stark lesson in that riddle. The hidden levy. Most quests prove tougher in action than imagination. Hubris can blind, but more often, the cost of victory slips, past notice, unseen, unpaid, or unaccepted. The Vanguard Index swelled 150-fold over 50 years to 2019. Sit back, let cash grow. Simple in hindsight, a child's game from afar. Yet holding steady through market cliffs tests more than nerve. Triumph's tribute isn't coins, it's turmoil, doubt, ambiguity, and hindsight's bite. These weigh light until they press close. Failing to see success carries a fee, tempts the chase for rewards without sacrifice, like slipping into a concert ticketless. A sleek $25,000 motorcycle offers choices. Pay up front, snag a worn bargain, or steal it. Few pick the thief's path. Risk overshadows thrill. Aiming for 10% annual returns over 25 years for retirement mirrors this. The universe doesn't gift it. The market teases, offering gains, then snatching them. The blue chip average hit, 10% yearly from 1955 to 2020, dividends in tow, a rich prize. But its graph dips dark with every 5% drop below peak. That's the gate price, the dues, the pass, and it stings. The weight of the reward, the bigger the bounty, the steeper the toll. Skystream soared 40,000% from 2003 to 2019, yet lingered below its high 93% of the time. Thunderhub exploded, 280,000% from 1996 to 2020, one of history's wildest, yet sat underwater 94% of those days. Options echo the motorcycle. Pay the chaos, choose a tame asset with leaner gains, or dodge the storm for the prize. Too many chase that last route, crafting plans to grab returns while skipping jolts. Turbulence is no secret, yet the urge to outsmart it persists. The market fates rarely favor toll dodgers. Some slip through, most pay dear. Horizon Research probed nimble allocation funds, hopping stocks and bonds to snag gains, blunt pain. From 2012 to mid-2013, when the Pinnacle 500 shed 18%. Of 105 funds, few outshone a 50-50 mix in risk-adjusted returns. Fewer than 1 in 5 softened the worst drops better than a static bench. The verdict: most lagged, jolted harder, or bled as much. DIY investors falter too, lagging their funds by 0.6% yearly, buying high, selling low. Dodging the toll triples it. The mirage of smooth sailing. Titan's wounds trace back to Victor Nash, a CEO who hit profit targets like clockwork, 0.31, a share against a $0.30 call, every time. He massaged numbers, borrowing tomorrow's shine for today. Trade Pulse exposed a ruse. Titan leased wind turbines to murky brokers, risks in-house, logged as sales. Nash owned it in unfiltered ledger. Teams unearthed millions, 15, 25, 40, to seal a quarter. Shareholders sailed smooth, skipping the booth. The tab landed later. A decade of brutal losses unmasking the slight. Crestline and Peakmore, mortgage giants, stashed billions in the early 2000s for a steady facade until the reckoning struck. Why pay gladly for homes or meals but balk at the market's fee? It's subtle, no clear sticker to weigh. When it hits, it feels like a penalty, not a trade. Punishment, not price. Fees are fine. Fines spark evasion. A ticket or tax stings as deserved. Market drops feel like slip-ups, fueling the dodge. Reframing the cost. Frame swings as a fee, not a fine, and grit grows to endure for gains. Few shrug off a 25% nest egg hit, especially untested newcomers. But see it as a pass. A $120 Star World ticket buys a day's joy. 20 million last year called it fair, not a slap. The trade's clear when the cost unlocks something. Market volatility's the same, not a penalty. But the entry for returns beating safe havens. The trick? Believing the ride's worth it. Not just bearing it, but embracing it as the key to the prize. No guarantee it pays. Star World can flop. Yet viewing the fee as a fine sours the thrill. Spot the cost, pay it,